Views expressed by Camaplan podcast guests may not reflect those of Camaplan. Camaplan does not guarantee the accuracy of information provided by guests, nor does it endorse or recommend any individual or organization. Camaplan is not an investment advisor, CPA, realtor, or attorney. You are encouraged to conduct your own due diligence before making investment choices. For any tax, legal, accounting, investment, or other questions, please consult a specialist. Hi, I'm Michael Duncan, and welcome back to The Road to Financial Freedom. This podcast is brought to you by Camaplan, a self-directed IRA administrator focused on educating investors on how to grow retirement savings faster through alternative investments. In each episode, we're going to take an in-depth look at the many roads taken to financial freedom and how they differ for each of our guests. Our goal is to help the listeners learn how they can achieve their own financial freedom through the experience and stories of experts that have done just that. Today's guest is an author, speaker, and 15-plus year private money veteran as the fund manager for Secured Investment Corp. She has sold more than $100 million in trust deed mortgages and raised over $30 million in debt and equity funds. I am very excited to welcome Heather Dreves to the show. Heather, how are you doing today?
I'm doing wonderful. Thanks for having me today.
Of course. I've been looking forward to it. You know, we got in contact a couple weeks ago at this point, and I've been looking forward to having you on and learning a lot more about what you guys do.
Yeah, me as well. We've been just really enjoying our interaction with Camaplan, and I'm excited to be here and share what I know and see if we can bring some value to your audience.
Forget my audience. I'm hoping you bring value to me. They are the icing on the cake. If they learn something, great, but I'm much more worried about me learning something. But I would love to just start with, kind of the beginning of all this for you. Obviously, you, like I said, you've been in this for a while, 15 plus years. You've obviously sold a lot of money in, mortgages and funds and whatnot. But how did this all get started for you? How did you start in this industry?
Yeah, well, that's an interesting story, and my path has been not what I originally planned to do out of college. I actually went to college to be a school teacher, and honestly, I have educators in my family, and every summer when I'm working, I kind of, despise them because they're at the lake all summer. But I feel like this was my calling. I fell into it by chance, to be really transparent. I had a friend that worked in the private money, industry. And when our two boys finally were in school full time, I decided that I was going to go back into the working world. Not that I wasn't working while they were young, but was working really just doing odd and end things, teaching, soccer camps and things like that, but was ready to go back. And had a friend that worked in a private money company. And I had some sales background in my experience, but knew nothing about private money. Like I thought, and I think a lot of us are like this. Our parents taught us that when you wanted to buy a piece of real estate, if it was something you were living in or an investment property, you went to your bank and you got a loan if you didn't have all the capital. And if you were investing money, you went to your money manager or your financial advisor and you invested in traditional things like the stock market. And that was just what I was exposed to. And so I went to work for him. He was a loan originator for a private money company, and honestly was absolutely mind blowing. I just was fascinated with the fact that, if you were an active real estate investor and you had a good deal and the numbers made sense, that there were private lenders that wanted to deploy their capital by lending you money, and you didn't have to jump through all the hoops that a bank would require you to do. And then really ultimately found my niche working with the passive investors that were looking to deploy capital in alternative assets. And many of them were using their self-directed IRAs. I didn't even know what that was. I was fascinated.
I'm right there with you. Before I had this job, I would have thought it was a scam.
I honestly was like, what's the catch here? This can't be real, And so long story short, fast forward almost 19 years. I've been with Secured Investment Corp. I'm coming up on my 12th year here. But, I've done just about everything. Escrowed loans, underwritten loans, service loans, had my securities license. So my focus now is really around investor relations, working with clients that want to deploy capital. And these are everything from people that are just getting started to investing, that are realizing that, there are other options out there in the investment world. It's not to say that you shouldn't be putting money in your traditional investments, but what I do encourage people is diversify. There's options out there. And, and these are people just getting started. Some of these people are at the end of their careers where they've retired and now they're looking to have their money work for them and continue to live the lifestyle that they've come accustomed to while they were working and had, income coming in. Now they can still have income, but now their money's working for them. And so, it's very satisfying knowing that I'm helping people create generational wealth that they can pass on. And also, like I said, continue to live the lifestyles that they've come accustomed to. So that was probably a really long answer to your question. But that's where I came from and where I am right now.
No, not at all. I always find that part, that's something I like to ask the people that come on the show because I find it's always very different. I find that, fewer and fewer people, or at least maybe it's rising as education about it all grows. But for a long time, I think a lot of people did just kind of fall backwards into this kind of job, into this industry, whether or not they knew it existed or just didn't think that there was necessarily a career to be had there. But it's very interesting knowing that you came from education and going to school to be a teacher. I think that's very fun and different, to be honest.
Yeah, I don't think my kids would disagree with me that I probably took a better career path because I was the worst to help them with homework. But I'm somewhat of an educator now, right? I'm just educating on something different.
No, that's what I was going to say. I can tell the educator from you. I went to school for music. I wasn't a music education major, but I was surrounded by a lot of music education majors. My sister is a teacher. So there's definitely a lot of like key personality traits and kind of the way that teachers are able to explain things that not everyone can do. And also total pass on helping your kids with the homework because I don't have kids, but I know that I could teach lots of people certain things. But if I tried to teach my sister younger than me, like that's not going to go well. It's not going to go well. It's different when you're teaching your own flesh and blood.
I agree.
So yeah, no fault on you there. That's just life. But yeah, so you've now been doing this for so long. What has been different than what you've expected along the way? I'm sure there's a lot, but is there anything in particular that has just turned out extremely different than what you were expecting?
I think the one thing that I wasn't really expecting was that I think in an investor relations role, you have longtime clients. I mean, I have clients that have done business with me for 19 years, and they're not just clients, they're friends, and I think that's what has been different than what I originally expected. It's not transactional, and I tell my team this, I have a staff underneath me that is investor relations as well. And I said, people are investing not only in the investment, but they're investing in you and the company. It's great to be able to tell somebody, hey, you might be able to get this type of a yield. But at the end of the day, what I think most investors are looking for is to know that, hey, at the end of the day, if things don't go the way as planned, is SIC and Heather and her team going to be there to see this thing through the end? And I think that's where the relationship side of this business comes into play. If you work with clients, they get the kinds of returns and investments that they expected, they're with you for a very long time. And so I really didn't expect it to be this thing where I grew this book of business and created these long-time relationships with these, like I said, they're not just clients, they've become very good friends of mine. And so I think that's been the biggest thing that has been a surprise to me over the years.
Yeah, I think trust is always important in just about any industry and any job and anything you're doing, really. But I can't imagine how much more important it feels when you're really trusting, either someone or a group of people with large amounts of money.
Right.
Even if it's happening all the time, even if that much money isn't the same to you as it is to me, that's
Mhm.
still a lot of capital that you're really having to trust that, that you have their back.
Yeah. Yep. And that's what people are looking for. And, the other thing I stress to my team is what may be a large amount of capital to Michael, maybe a small amount of capital to somebody else. And
That is probably true.
all investors should be treated the same, and it is a big trust thing. It's investing. It's no different than the stock market. Sometimes things don't go as planned. People
Yep.
invest in the stock market all the time and things go sideways.
Yeah.
They want to know that you're going to be there. How are we going to get out of this together? It's never a perfect situation, but at the end of the day, they want to make sure that who they're investing with is going to be there through the good and the bad.
Have you ever had trouble bridging the gap with potential investors kind of deciding not only to invest maybe for the first time in alternative investments and passive investments, things outside of the stock market, but also them investing with self-directed accounts, using your self-directed IRA, 401k in a way that most people aren't even aware exists, like we were talking about earlier?
Yeah, I think like if you talk about it right now in this current market, there is so much education out there about self-directed IRAs. I mean, this podcast is a perfect example, right? There's webinars, podcasts, and I think the current marketplace, people are much more in tune with the opportunities that can be provided through a self-directed IRA. I think years ago, yeah, there was a huge gap. And what I would see happen is, hey, Michael invests with his self-directed IRA, and now his neighbor does it, and his brother does it. It's kind of word of mouth.
Yeah.
Where I feel like now people are just kind of tired of hearing from their money manager or their 401k administrator. Well, we're getting 2%. At least it's positive, and
Yeah.
they're going to the internet. I mean, there's so much information out there now, right? And they're saying there has to be something better. And I think people are just talking about investments and money more than they did in the past. I think it was really taboo. I honestly don't remember my parents ever talking about money in front of us. I don't remember them talking about investments. And I think, now people are involving their kids, their generational families. And so I think the gap is different now. And I think if you can have those conversations and people have access to like an old 401k, or they're looking at, setting up an IRA to create tax deferred or even tax free situations, people are looking for options like that. So I think the gap is easier to bridge now than it was multiple years ago.
Yeah. I mean, absolutely. As, someone who I agree, my parents never talked about that kind of stuff openly about with me. I learned what I learned in school. My mom actually worked for like a retirement account type place.
Oh, interesting.
Um, so when I was, younger than most, I had a retirement account. My mom educated me generally. It was a very standard one.
Hmm.
But I understood the importance of it at the very least. But, really, I think what you said is a really good point about the internet. It's scary because there's a
Hmm.
lot of misinformation out there.
Right.
People can lose a lot of money due to misinformation, but I have never been more interested in money and the idea of investing as I was during COVID, during lockdown,
Hmm.
because of all the stuff going on, and some of it was stocks, with people would call them meme stocks, the Reddit stocks,
Right.
GameStop. I believe there's even a movie coming out about it.
Oh,
Not a sponsor, but I believe it's called Dumb Money. And it's about people losing like millions and billions of dollars or gaining millions and billions of dollars to then lose while investing in these stocks because they realized they all of a sudden were educated on the way that they were able to do it.
okay.
And that's what was missing in the past was just this education of like, I assumed you just kind of put money in there and in 40 years you had a 2% growth and it's like, great, good to go. So it's extremely interesting the difference, at least in my opinion, for my age group, like the difference in knowledge of all of this kind of stuff from where it was even 5 years ago.
Yeah. Yeah. Well, and it's more accessible to make those investments,
Yes.
right? You can just grab your phone,
Yep.
get on your Acorn app and make those investments. And I agree with you. I mean, it's a double-edged sword with
Yeah.
amount of information that's out there. You have to be diligent enough to do, and I tell people, do your own push-ups. You have got to do your own due diligence. If you're not going to take advice of a financial advisor or a money manager, which I'm not here to tell everybody to leave your financial advisor. I'm just saying there are ways you can diversify, but you have got to do your own due diligence. So you do have to take some ownership in it as well.
Yeah, and I think ownership is super important, and I think I think the idea of ownership and due diligence goes right in hand with just the information that's been out there. I think part of the reason that people weren't as informed about all of it was because they couldn't be, to a certain extent. It was a lot harder to do your own due diligence. It was a lot harder to inform yourself and really make your own mistakes in a lot of ways. At least with this, like if I'm going to make a mistake and hopefully not lose $1 billion, I'm going to do it on my own dumbness.
Yeah.
And we can tell, because I couldn't think of a better word than dumbness, that I probably am going to lose $1 billion. But I do think that's so important, and it's such a difference. It feels like it's getting bigger and bigger every year, and I think that goes right along with self-directed accounts and the idea of being able to do alternative investing with your retirement funds, which is, again, when I've been at this job now at Camaplan for about a year, and about a year ago when I applied, I had no idea what a self-directed IRA was.
Oh, wow.
No idea. Interesting. Yeah, I applied to be a podcast producer, and once I Googled it, tried to understand what a self-directed IRA was, and I believe the first thing I came upon was someone trying to explain it using a horse farm as the investment.
Okay.
Needless to say, that really threw me off. Yeah. But regardless.
Well, there's just such opportunity, because a lot of people, one of the things I've seen over the years too is, years ago, people didn't switch jobs. People didn't move. Now there is lateral movement between jobs all the time. And what I think people have realized, or at least learned, is once you leave that employer, if you do have a 401k, the great thing about leaving is now you have access to that 401k. You're not at the mercy of the previous administrator that was putting it in whatever plans the company decided to do. It's important if you're getting a match on your 401k. I think that's like giving away money if you're not doing it, but you're also at the mercy of the administrator, right? Once you leave, now you have access to this money. We just recently did this with my husband's 401k. He left an employer about 2 years ago. For the first year, his 401k was in the tank. We waited till it got a whopping 2%, and then we moved that to a self-directed custodian, and now he's invested in a promissory note where he's getting 11% returns on his money.
And for those that aren't great at math, 11 is more than 2.
Yes,
significantly.
Just a little. So, just a little.
Very exciting raise there.
Yeah.
So, with this, I'm trying to think of a good way to phrase this question. With so much information out there and people being able to do their own due diligence and learn on their own, do you find that the people that are coming and investing with you or through you, like, do they seem more informed and are doing safer things, or is it almost that they're kind of willing to take bigger risks because of the information they have? Like, how does that kind of balance itself out?
That's a really interesting question. You would think that they would be more informed. I believe they're just dangerous enough, right? They have enough information to make them dangerous. Yeah. One of the webinars that I put on probably once a quarter is how to do due diligence on an operator. And I've had, colleagues say, why would you tell them how to do that on somebody else? It's like, because I hear horror stories every day. I have clients, and I tell my clients, the first thing I tell people, don't chase rate. Do not chase return. Make sure you're investing in something where it's a strong operator. They've got some track record with them. And if all of that falls in line, you're going to get the returns you want. But I hear it every day. Gosh, you told me not to do that. And this guy told me he'd pay me 15%. And now I think I'm going to lose all my capital. It's like, I think they have enough information to go find deals out there. What I don't think that they do, it's not that they don't have the tools to do the due diligence. They just don't do it. Yeah. They get stars in their eyes and, this investment, I could get 20% returns. It's like, if it sounds too good to be true, it might be too good to be true. So I have a passion for educating people. Like, do your due diligence, ask the hard questions. And if that operator is unwilling to answer those questions, or they just don't have an answer, that should be a red flag that you should probably move on. They also get analysis paralysis, right? They go into these deals, oh, I want to fund a note. And then upon further discussion with them, what they're trying to accomplish isn't even going to be accomplished by the type of investment that they're looking at. It's like, you need to sit down and be real with yourself. And if you have a partner, have that conversation. What are we trying to accomplish? What kind of dollars? If you're chasing, for example, tax benefit investments like a syndication where you get depreciation, but you're investing with your CAMA plan IRA, it's not going to matter anyways.
Yeah.
So, having those conversations like, what kind of dollars are we investing? What are we trying to accomplish? Are we trying to accomplish growth, or are we trying to accomplish cash flow? Those are things to think about, because then when you start looking at deals and operators, you can say, oh gosh, this isn't even going to, get me what I was trying to do. And then you move on to the next one. But they get so overwhelmed and so excited to get their money out there, and they forget to do some of the really important things.
Are people normally shocked when you bring up these questions, when you're talking to them about something that they might get starry-eyed about? When you bring these things up, do you kind of just get like a confused, slightly shocked face? You're like, I didn't think about any of this.
Oh yeah. And they'll say, I can't ask them that. It's like, that is your money. You are looking at investing with them. You can ask those questions, and you should. Yeah, absolutely. I think hopefully, and I know other operators in this industry that talk about this as well, is, ask the hard questions. Are they an audited fund? That's one simple one right there. Do they audit their funds outside of their internal organization? If the answer is no, I would have concerns with that. You want third parties keeping their eyes on these operators. They are governed by the SEC, but that doesn't always mean they're following the rules. It might just mean they're not following the rules and they haven't got caught yet, right? What kind of processes and procedures do they have in place for checks and balances? It doesn't need to be 50 questions. I mean, I could give them 3 top ones I'd ask, and if they didn't answer them the correct way, I would be moving on to the next operator. But yes, to your question, they are a little surprised. Well, I can ask that. It's like, well, yeah, it's your money. You should ask that. You should be asking me that.
So hypothetically, if I was about to make an investment, what are the top 3 questions you'd ask? I mean,
I would ask, big questions are, what is their track record? Have they been through a market downturn? That's a big one. I mean, if they're an operator that's only been around a year or two, considering the market that we're in right now, how are they going to handle that?
Yeah.
I would also ask if they audit their funds outside of their firm. Are they using a third party that has eyes on their funds to make sure everything is as it should be? And I would also ask them, where they see the market going. What is the black swan event, and how would they handle that if there was a black swan event? If private lending went away and nobody was borrowing money, how does their fund still make money? What kind of cash flow is coming in to pay you? And what would they do if they had to wind it down? Those would be the big 3 things that I would ask.
Can you expand on what you mean by a black swan event?
Black swan is like, so for example, I'll use our fund as an example. We invest in residential real estate, and we are a debt fund as well as an acquisition equity fund. So we lend money and we buy real estate, always in the residential market. So a black swan event would be, for example, all of our borrowers stop borrowing money from us, and then they all stop making payments. Our fund makes money for our investors because we pay out earnings off of cash flow coming in. And then on the acquisition side of things, if we can't buy any more real estate, if nobody's selling, and then we're not able to sell properties, also, we don't have cash flow coming in from that. So that's a black swan event. It's affecting all of the ways that our fund makes profit. And how are we going to handle that, right? Like, well, hypothetically, if nobody was borrowing and nobody was making their payments, we would start to sell off our assets and pay everybody out their equity as assets sell. And it would be the same thing for the real estate. So that's what I mean by a black swan event. It's unlikely that all that happens. I mean, it would have to be a doomsday event, but it's important to ask those questions. If you're investing in a syndication and it's an apartment complex and they do rent regulations and then a bunch of the tenants stop paying, like, what's their plan? They're probably not going to be able to sell it for what they thought they were going to. Syndications typically rely on value add over the years, and your big payoff is when they sell that property or refinance it. So if everything's affected by that, what's their backup plan? So it's really like, what's your backup plan? And that's a good question to ask.
Yeah, I mean, I think if you're planning for worst case scenario, regardless of whether or not it happens or how likely it is to happen, at least you can feel comfort in knowing that you have a plan. If Texas tomorrow gets a snowstorm, I mean, there's a reason that when they get a quarter of an inch, it feels like the world is ending. I'm from Pennsylvania, so that's not, it's pretty normal for us, but I feel like on the news every year they get a quarter inch and then it's like the world is ending down. Exactly. Like imagine if they got a snowstorm. It's like, how are they prepared to deal with that? I feel like that's kind of the question you're asking is, if you get a snowstorm, what are you going to do with your roads?
Yep. Yeah, absolutely. And I think those are very valid questions to ask. I mean, let's be honest, this is real estate. It's never a perfect scenario, but I think where the better operators and the better real estate investors are successful is they have backup plans. They have multiple streams of income coming in and they have backup plans.
I agree. I think those are three very important questions, and I'm going to keep them in mind for the future just in case. But finally, before I ask you to plug yourself as we're getting to the end of this episode, I do have one question that I ask everyone that comes on this podcast, and it's simply, what does financial freedom mean to you?
Oh, I think it means a lot to a lot of different people. But for me, financial freedom is not being a slave to a job, having multiple streams of income. I tell my kids this, our oldest son just became a fireman and he's like, this is great. I go, you need to have a side gig. What happens if you get hurt and you can't work anymore? Never, and not, I guess maybe not being a slave to a job is not the best explanation, but having options, right? Having a daytime job with benefits is your goal, have a side gig, have a side hustle, and the ability to travel with my family, live the lifestyle that I want. Everybody's lifestyle is different, and not, being tied to one thing. Oh, I can't go because I got to work 8 to 5, That's what financial freedom is to me. And being able to retire and have the lifestyle that I've come accustomed to. I don't know that I'll ever just retire, but, I think having multiple streams of income gives you the ability to do that. I just think so many people, go to college, get that 8 to 5 job and think that's going to take care of them, and it's not. You're going to need to have side hustles, Social Security. Who knows if it'll even be here in 15 years. Even if it is, that's not enough to live off of, in my opinion. So that's what financial freedom is. And then also the ability to leave generational wealth to my family, to not only just educate my family. I don't want to just give my kids money, but educate them on how to make money and be successful, and pass that down to them and their generations and so on and so forth. So I think there's multiple facets to that.
I think that was very well said. Thank you. And thank you for coming on this podcast. Lastly, I would just ask that you let the listeners know where they can find you, how they get in contact with you, how they can learn more about you. Absolutely. Please feel free to plug yourself.
Okay. Well, they can always find me at our website at securedinvestmentcorp.com. We've got quite a bit of information on there about our real estate funds that we manage, as well as our mortgage notes that we sell. And they can book an appointment with myself and my team. We're a pretty small team. There's 4 of us. And so they at any time can express interest, and all of our contact information on there is as well. So securedinvestmentcorp.com. And if you put your contact information in there, it'll let you schedule a 15-minute appointment with us, just to go over your portfolio. I mean, we're not financial advisors in full disclosure, but we do believe in you guys diversifying and adding some alternative assets in there, so we can look at that with you guys. And then you'll also start to get notification of our webinars and all those types of things. We do that once a month. So we actually just did one last night with Camaplan. It went really well. I think we could have probably stayed on there for 2 or 3 hours. Poor Joe.
No, Joe loves it. He really does love it.
Did a great job.
He's a great guy. And all that information will be in the description of this episode as well. Heather, thank you so much for coming on today. I really, truly feel like I learned a lot, and it was wonderful talking to you.
Yeah, you as well. Thanks for having me.
And as always, thanks for listening to The Road to Financial Freedom. If you enjoyed the show, please support the podcast by remembering to rate, review, and subscribe. You can keep up to date with us on Facebook or Instagram. Thanks again, and I'll see you next time. If you like what you're hearing on The Road to Financial Freedom and want to learn more about self-directed IRAs and 401ks, click the link in the description to download a free toolkit with everything you need to get started.